Power Trading Radio Live, fueled by Online Trading Academy. For more information about the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everyone. Welcome to Power Trading Radio. A splendid day in the markets for everybody, I hope. It really was kind of not the best day out there, but there were some things that were out there that were moving, and we will talk about those here shortly. The verdict is in. I actually, we did this poll for you guys about which webinar you guys wanted to see, and what we'll do is next Wednesday, we're going to have a webinar, and there's 3 possibilities right now. I'm going to actually run through some instructors and see which ones I can get them to come in and do this webinar for us. But it's between one of 3, which you guys will get. It's going to be between either support and resistance, which is supply and demand. We're going to look at either Fibonacci, or we'll be looking at Bollinger Bands, actually in ETFs for the 4 that were out there. So I'll let you guys know tomorrow exactly what that webinar will be. In the meantime, we have a webinar tomorrow morning. That's going to be at 8 o'clock Pacific time. What's that make it, 11 out on the East Coast there? That'll be on the new normal. It's going to be John O'Donnell and myself speaking about all the market changes, what does the big picture look like, and kind of how can we utilize that information as traders, and kind of breaking down the 7 pillars. It's really kind of an overall fundamental piece and looking at how trading works. So if you guys are interested in learning more about the basic mechanics of trading, we have a 1-hour webinar tomorrow morning at 8 a.m. Pacific, 11 a.m. East Coast time. To get to that, it's very, very simple, guys. You just go to the home page at powertradingradio.com. There's a little button there that says webinar. Click on that, and it will sign you up, and we hope to see you in that session tomorrow. Now, as usual, we want to make this interactive, so please give me a call. The number is 888-304-8723. That's 888-304-8723. Or you can power blast in your questions as usual. And I have a whole sheet of questions to go over today, so we'll get through those slowly. What was moving our markets today? We've been pinpointing or pointing the finger at a lot of the economic news as basically being the catalyst for a lot of the market movements lately, because people are, I guess, at this point really worried, is this rally going to continue? And people were wondering, what's going on out there? Why is this happening? Well, if we look at today's economic announcements, for example, we had personal spending, personal income, pending home sales, and factory orders came out today. Those are all pretty important things. If personal spending drops, obviously that's a sign that there's contraction and maybe retail sales numbers will suffer in the coming months and more spending problems. So what we noticed, they were actually expecting on personal spending a 0.1% increase, so slightly more spending. Reality was unchanged. Nobody's spending any more money. And going into the summer months, you kind of would expect there to be some more spending. So that's not a very good sign for businesses. If we look at the second number out there, personal income was expected to grow by 0.2%. The reality was nobody made any more money. 0% gain. Again, a big negative, second negative check mark on the day when you look at that piece of fundamental data. So let's look at those 2 negative factors. Next, you have pending home sales. They were expecting a 0.5% increase. It actually declined by 2.6%. That's a pretty big discrepancy there. It's not like they missed by just a little. That was a pretty big, over 2% error. Miss, call it an unsurprise, a disappointment, if you will. So that's 3 pieces of fundamental data right now. They're giving us a fairly negative impression of what's going on out there in the markets. And the last one, which I think is really important, is factory orders. Okay, factory orders were expected to be a 2.2% decline. They actually were a 1.2% decline. So we've got 4 pieces of pretty negative information there right from the get-go. Now, those pieces of information can certainly have an impact on the dollar, and we saw that today. We saw some weakness out there in the dollar. And what I'm going to do is I'm going to have TJ, the chart master, show you guys my screen here, which is the trader's dashboard. And as usual, I want to take you guys out to the trader's dashboard to show you kind of what is moving on the day. And you guys can see on the morning coffee cup here, our morning start icon, we had all that personal income and expense information right here, all those economic announcements. I'm going to go to the commodities future tab, and we can see currencies as well as all the other metals and softs and indexes. So we saw the U.S. dollar was down on the day, whereas most other currencies were actually to the upside. The U.S. dollar certainly not doing so well today. And as this program progresses, we'll start to look at some of those other currencies against the dollar, and they were all doing fairly well today. What else out there? We had oil to the upside. Again, that has to do with the weak dollar. We had gold shooting up as maybe more fears. Not shooting. Let me rephrase that. Getting a little crazy over here. Gold was moving to the upside. I wouldn't say shooting, but certainly some increase there on gold up to 1185. And unfortunately, I don't follow the soybeans or anything like that, but I'm sure at some point I will get questions from you guys on soybeans, etc. So what does that mean for you? Well, that means that this market may be stalling out. If we look at the charts here, let me go out and pull up let's go out to our chart of the markets. Here's our S&P 500, and you can see, let's go to SPY, make it a little bit easier for me. If we go to the S&P 500, you can see that today was a little kind of, I'm not going to call it a doji, it's really more of a spinning top pattern. And a spinning top pattern is really kind of hesitation out there. It's uncertainty about where markets are going to go. Now, we have had a fairly nice move. If you guys notice on this chart here, we've come right into this overhead resistance level right about here, which was one of the targets that Rudy had pointed out about a week and a half ago. He said, you know, when we hit this 1120, 1128 mark, that's where we're going to start to see some resistance. And certainly, sure enough, we're seeing it right now. Now, what does this mean? Does this mean the bottom's going to fall out and we're going all the way back down to, you know, S&P at 666? I doubt it. But we can start to strategize. For those of you who have been long over the last couple weeks and have done fairly well, this may be the point where you want to start taking a little bit of money off the table as we hit that overhead ceiling of price resistance. Okay, and this is the same thing with a specific stock or a specific market or currency. It's still the same basic principle. As we hit those levels of overhead resistance, we certainly want to start to lock in some profits before it starts to turn against us. As a good friend of mine always says, it's better to take profits when you can, not when you have to. And this may be one of those moments where things start to turn, given this economic bad news. Now, we have a lot more announcements coming out later on in the week as far as economic news, but these were certainly big ones for the day, and I would say those are the most important ones that we wanted to be following. Now, we had earnings announcements that came out this morning, and I mentioned a few of them last night on the program. There weren't any, I would say, monstrous names out there, not these super big important ones. We did have, you know, Clorox and Coach bags, and given the fact that I was at a reunion this weekend, there were a lot of Coach bags. I might be personally going along there. Dow Chemical, you had Priceline, you had Hercules Offshore, which is kind of involved in a lot of Gulf drilling, which didn't seem to be impacted that much. Actually did better than expected. MasterCard. I wish I would have said this was going to be the popcorn pick of the day. I know some people like to see that one, and the popcorn pick of the day would have been MasterCard. On the next break, what I'll do is I'll bring it up on a intraday chart and show you guys the big movements that it had before. MasterCard beat pretty nicely, $3.49 versus $3.33. And one that I've been looking forward to was NYSE Euronext. A lot of people say, well, who cares? It's just a NYSE Euronext. Well, what we're seeing, guys, is a transition to, we'll call it the new norm. It's the topic for tomorrow's webinar with John O'Donnell and myself. But the Euronext is basically what the New York Stock Exchange did, is bought the Euronext, and now they're consolidating. And one of the things I love about trading is that if I understand how a mechanism, a system works, and I know how the New York Stock Exchange works, I know how the NASDAQ works, if you understand these two basic systems, you can trade more and more markets around the world as they start to consolidate. Right now, you have the New York Stock Exchange is invested in Europe. Same with the NASDAQ. NASDAQ is invested in London and a few other international markets. Pretty soon, we may not have 24-hour equities trading, but we will have 24-hour equities trading in different markets, meaning if our window of trading here in the States is 6.5 hours, let's say it's from 9:30 to 4, well, when that market's done, you could trade in the after-hours session, but there's no liquidity and it's extremely high risk. Well, now we'd be able to go over and trade in the Asian markets. And after that, we could trade in the European markets. Because remember, price is simply a reflection of behavior. And around the world, there's generally the same amount of emotions and behavioral analysis that goes on. That analysis that we did on SPY just a second ago basically is looking at an identifiable level where sellers were in the past. Doesn't matter what country I'm in, what language I speak, what culture I am. It doesn't matter. It's still going to react the same way. People have these predictable, innate behaviors that they do. And when these technologies, these markets open up to us, we can use them in a more efficient manner. So New York Euronext, just about to be the point where we can start trading all those international securities. I know that right now, if you're with the NASDAQ, you could actually trade I believe it's the Oslo Stock Exchange, which isn't really the greatest exchange in the world, but it does give you that flexibility if you can find a broker who will let you trade it. That's the big issue, guys. It's the currency exchange. One of the things that everyone that's listening should pay attention to if you are looking to trade these international markets is they're going to settle in the local currency and then transfer them over to dollars. Remember that spread we've been talking about on the radio program? The spread is usually what you're giving up. Well, when you buy these things, you're giving up that spread when they convert that currency back. So it's important that you're with I would say, a reputable firm so that you don't get caught off guard.
Yeah.